Good afternoon, everyone. Welcome back. Gabe Velazquez here with you. Friday session, transparenttrading-solutions.com. Hope everybody had a great week of trading. Let's get right into it as usual. First point, I just tweeted a little bit earlier about, I guess really what's the most noteworthy this afternoon was the fact that the Nasdaq futures, the Nasdaq 100, is barely right sitting on. As I was writing the tweet about an hour ago, we had not yet eclipsed the Wednesday high. And why is that important? Well, the Wednesday high was when we had the weaker than expected CPI number, right? And we had a strong rally that day, and then we had on Thursday we had the PPI, and we did get a pullback at the end of the day. So we had two soft inflation numbers, and as you might expect, the reaction was positive. So that is in the past, and we did take out the 4,200 on the S&P. We closed pretty strongly, about 79 above that. Now we have to contend with the 4,300. Everybody, please look up your charts now, as usual. Type in the chat also, by the way, if you can see me okay, and so forth. Also, guys and gals, if you want to subscribe to the newsletter, if you want to contact me, there's a link below that links you to our support. And you can ask me questions or whatever if you link to that for the upcoming like next Tuesday show and so forth. So if you want to contact me directly, you can click that link below, and that will get you to our support staff, and I can respond to you that way. Okay. All right. So if you pull up your charts, let's start again as we typically do. Let's go with the S&P. We were trading in a 2-week range between 4,100, 4,200. I did mention, and obviously we were talking about the inflation number being a biggie, and that could have gone either way. And I think coming in, the expectations were already kind of built in for a high number, and the fact that we came in a little bit lower, and the market just needed another excuse to go higher. And so here we are. Again, we're closing at 4280. If you look at your daily chart of the S&P, you will clearly see, again, everybody get your charts out, a resistance level in the S&P. We call that a resistance because we actually hit that back in April. We hit that about 3-4 times, roughly around 4,300. That's very, hey, Trader T. Oh man, that was like 2 years ago. Yeah, yeah, yeah. It's actually more than 2 years ago. Yeah, I left July 11, 2020. Yep. So. Yeah, I'm check out my website, Trader T. I don't know where you've been or whatever, but yeah, check out the website. Contact me on support if you need if you want to know some more and so forth. Okay, all right. So let's get back to the charts. 4,300 clearly seen on the charts. Look at your daily. And why is that important? Well, I've been talking and tweeting about. We've had this massive rally, and you guys know that I was super bullish down at the lows. Is the market does it still have some legs? Possibly, perhaps. But here's the thing. Look at the VIX. So I want to talk about that for a minute here regarding the equities. You've had the Russell just on a tear. The S&P clearly here now still has 4,300. It's up almost 16-17% off the bottom, halfway to the highs, believe it or not. Pretty unbelievable, right? But that's the way the markets work. But here's the thing. VIX now below 20. What does that mean? Well, pull up a chart of the dollar VIX. Why is that important? Well, because the VIX is the fear gauge, also measures volatility on the S&P. When you have a VIX in the mid to high 40s, 50s, that's generally when markets have been sold off, fear is rampant, people are buying hedges, buying puts, and incidentally, that has marked a lot of the bottoms in the last 6-7 months. Come full circle, now we're under 20. Check out the chart of the VIX, and you'll see between, let's call it 16 and 20, has marked most of the recent peaks. Now, that's not to say things can change and we go below 15, but I don't see that. Why? Because the Fed is still tightening. Inflation is at 8.5. By the way, who here thinks 8.5 inflation is a good thing? Question. Any of you think that, are you jumping for joy at 8.5 inflation? What do you think? Of course not. By the way, is inflation, so my point to everybody is, I talked about this. I've been actually talking about this if you've been following the YouTube channels. Don't fight the Fed, right? And it's really interesting to me that one number, and now everybody assumes that the Fed is going to pivot and so forth. Check out oil now. Check out nat gas. By the way, we had a grain report today. Look at the last month in the grain markets. They're starting to creep up again, and so on and so forth. So, those are just things to consider. I'm not telling you that the market's going to drop off the cliff here, but as I mentioned in my tweet earlier this week, be careful. I still believe you could have some upside here to the stock market, but just like when we were at the lows, the risk and reward is now tilting to when you're a buyer here chasing this market, be prepared, and probably not the best idea. Correct? Yeah, you could still get some upside a little bit here, but I would be very cautious. In fact, I'm setting up some shorts in AMD specifically. I already have that trade sitting out there, and possibly a little bit higher in the S&P and the Nasdaq. Now, another notable that I just tweeted about, actually when I tweeted about here coming in here, is briefly mentioned that the Nasdaq barely closed. When I wrote this an hour ago, it had not taken out. In fact, it closed below. The high on Wednesday was 13,575. Where did the Nasdaq close? 13,566. It's still kind of trading right here, right? Why is that important? Because that tells us that the Nasdaq is, in fact, nobody's talking about this, underperforming still, and you can see that clearly with some of these. The only thing driving that index really are the mega caps. The Amazons, the Apples, the usual suspects, right? But under the surface, semiconductors, as we know, a bunch of them have been warning. They've had a nice run up, but look at the charts of AMD, TSM, the big ones, so forth. So it's going to be really interesting next week. We got kind of a vacuum of since most of the earnings are behind us, and we're coming up against these resistance levels in the S&P and the Nasdaq. By the way, the Nasdaq, look at basically 13,600, very similar to, that clearly you can see the Nasdaq is a little bit of a laggard, just simply because it was not able to take out again that Wednesday high, which is very key, because Wednesday again was the day we had the big the soft inflation numbers and so forth. Okay, all right. So to sum it up, yeah, the market still has some legs. By the way, can you buy pullbacks in the S&P and the Nasdaq? Absolutely. But at this point, I am not interested in buying any kind of pullbacks until we move down back around the. If you look at the S&P chart again, looking at your S&P chart, I'm really not interested in buying any pullbacks until we get down around the 150 area. That's kind of where we took off from, right? So you can see some levels there, very distinct on a 8 on a smaller time frame. When 1 hour, I don't look at anything less than an hour or 30 minutes really. Okay, so yeah, can you buy? But I would not be chasing this clearly on the upside, and I would wait for pullbacks to buy in the S&P and in the Nasdaq. I think the Nasdaq is going to be the clue coming into next week. Again, for all of the aforementioned reasons, and then with the VIX where it is, so that's where it is there. And do I have any actual shorting levels in the Nasdaq? I'm actually looking at TQQQ and there's also a I don't know if you guys because I'm really active in options too. You could also look at some option plays on that on the put side, and I'm actually using the AMD as a proxy a little bit. I just mentioned that I'm already setting up some shorts on that. Okay. Now, in relative to the distribution level, there is a distribution in the Nasdaq 100 futures. If you again pull up your chart, 13,700, 13,788 ish, you can see that level there. So even if we do rally, we are going to run into. There's actually a couple of levels up top that I'd be interested in shorting going into next week. Also, and then we'll move on from. By the way, any questions? You guys have any questions so far? Is this making sense? I only have half an hour, so I got to move here. I got a 30-second delay on the thing, so I will wait for your questions and I'll keep talking. Seasonally, also, if you have been around the markets for any extended period of time, if you're a little bit of a grizzled, I don't know if Dennis is in here, but just quick reminder, and I'll, and as usual, I'll ask this as a question: is the late August, September period, is that favorable for the markets typically? Do we have like some huge rallies in the market around the September timeframe? Or do we typically have some weakness coming in during September? 2008. Remember 2008 and so forth, even last year, right? So yeah, just again, we're coming into some seasonally weak patterns in the markets. Okay. And we still have the Fed, and we still have higher interest rates, which by the way, let's talk about the bond market. Let's transition now into the bond market specifically. Well, I'm not Oksana. I'm not talking specifically about volume. Yeah, that's true because it's vacation season and whatever. But go back and look at your charts, Oksana, your long-term charts, and seasonally, you've had some of the worst sell-offs in history. I mean, you go back 50 years, right around August, October timeframe. Just check it out. Don't take my word for it. Okay, Oksana? Okay, now let's get into the bond market, because this is what's driving everything right now, interest rates. I've been talking and writing about the 119 level in the 10-year. That's really the key. And you notice today, by the way, did you notice yesterday? I don't know if you guys were watching. Did you notice the big bond sell off yesterday? Right. By the way, guys, again, if you have any questions that you want to ask me, just hit the link below. That takes you to my support staff, and I will get back with you if you have any questions or you want to get on a call with me. I will be open to that as well. Okay, just a free Zoom call, and we can. And I do have another presentation coming up next Thursday, by the way. Also, uh, next Thursday I'll be talking about gaining an edge. I'll talk about that on Tuesday as well. So if you guys want to sign up for that, it's free. Okay. All right. So bond market, very, very critical, everybody, right? Look at the 10-year, and I'm coming in this week as usual with a volatility play in the bond market via TLT. And kind of flat on that. We did have a big sell-off in the 10-year yesterday and the 30-year, and we kind of slowed down today. Look at the 10-year around 119. You can clearly see that that's been holding. We did pull back from the 119, 13 and a half level. Okay. But 119 is going to be very critical. Now, why is that important? Because if we break 119, that's going to shoot yields right back up again. And we know what happens with yields going up. If yields really start picking up and going higher, that will pressure the Nasdaq and pretty much the entire market. And so you got to look at interest rates. So keep an eye on that 119. If we can break above 119.13, which is an hourly distribution, you can see that on your charts. That's in the ZN, right? Or whatever platform you're using. That's the 10-year note, which is really what I focus on primarily, simply because that is the driver of a lot of what's going on in the stock market, right? The 30-year also, but primarily, if you want to keep it super simple, just focus on the 10-year. Okay, so those are the levels. 119 bottom line. That's going to be key. If we break that, looks like we may be heading all the way down to 17, and that would push yields all the way back close to 3, and that again could have an effect, or will have an effect, I should say, on the stocks. Okay, all right. So that's that. Dollar had a big sell-off after the CPI. If you guys are watching the dollar, and if you're trading currencies, and you notice I've been talking about the yen and the Mexican peso, right? So the yen had a huge rally as the dollar dropped off, and now it's come all the way halfway back down because the dollar has rallied now. So at the end of the day, look at 105.15, 104.15 distribution, daily distribution on DXY. You can see that we fell deep into that level and came out. And why did it come out? This is really important because rates came up yesterday, right? And so if you're wondering why did the dollar rally again, because rates come down. So remember, it's rate sensitive as well, and also inflationary. So keep an eye on the dollar. I'm really one last thing on, and then we'll move on because I'm going to run out of time here. The yen possibly goes all the way back down to where I mentioned the other day at the at the 74.15 level. Check that out. But I do believe it may actually drop all the way back down again, and could be another opportunity. And also the Mexican peso is coming into a gap at 50.86. So check it out. If you haven't traded Mexican peso, I don't know what whatever platform you're on, that's the M on my platform. it's the 6M, and I don't know whatever platform you're using. I would encourage you to actually follow that, because if you've been trying to trade all the rest of the currencies like the euro and the British pound and all that, it's just been chop, right? It just you haven't really been able to get any traction on that. But why take again? Just if you have your charts up right now, take a look at the peso and the yen and look at the moves on those things. So as you guys know me from the past, we only focus on markets that are moving, and we don't spend any kind of wasting time on stuff that is like, for instance, the euro. If you look at the euro, I mean, that's just garbage, right? You can't trade that. I mean, you could, but you're wasting your time, more or less. You're not getting any big movement out of that. Okay. All right. So let's finish up. I got 10 minutes. Oil. Again, everybody got super bearish as it broke 90. It went down to the 87, and it was right back up again. Very, very challenging trading, big ranges, and looks to me like oil is establishing a new range now. And I'm actually starting to warm up and get a lot more bullish on oil. 87 to 97, you can see resistance. What oil, again, if you look at your daily charts or even your higher time frame charts, you can see the pattern with oil over the last 6-7 months. Obviously, we had that huge spike after the incursion of Russia into Ukraine, and then settled in a range up between 110 and 125, and so on and so forth. Fast forward, back in July, we were in a range between, I kept talking about this 95 and 100. Now it seems to me like we may be establishing a new range between 87 and 96. And if we break out above 96, and I do expect, we're coming into hurricane season. We're coming into, everybody knows what's going on in Europe with Russia weaponizing, their nat gas and oil and so forth. I do believe, and in fact, I'm looking at taking a long-term position in oil using USO. If you guys don't know what USO is, that's the oil ETF. And the reason I use ETFs, because obviously I don't want to worry about rollover and so forth. So when I take on a longer term position, meaning a couple of months, 3, 4, 5 months, I usually use options on ETFs, as you know. And if you're interested in something like that, contact me again on that, and I can give you some guidance on that. Okay. So that's pretty much it. And similarly, you can see in the energy, moving to the energies, nat gas, very volatile, extremely volatile. I would venture to say now, nat gas is in a range between 7.5 and I think if we do rally here, no, Oksana, USO moves pretty darn good. Have you looked at it? Yeah. That's the whole point. USO move. If you want some action, then trade XLE then. But that's just stocks, right? That's just that, like the Chevrons, and it's basically 3 big stocks. Chevron. Yep. Correct, Oksana. Yep. Okay, so nat gas, I believe, is forming a massive range between 750 and 950. And what I was about to say is not lately what? I'm not sure. I lost my train of thought. Nat gas. So if we rally in nat gas, and I don't know if any of you in here from Europe, but you know what's going on with gas prices in Europe. If you haven't seen what's going on there, I do believe that again, weather has obviously an impact, and if they again can get this LNG, which is liquefied natural gas, to Europe, from here, because we're awash in that gas in the United States, but they've got huge shortages. Nat gas could easily surpass the 9.5, 975 level. That wouldn't shock me in the least. In fact, if you look at your monthly chart of nat gas back in 2008, it was $15 millionth BTU. So it wouldn't shock me if we get up there again. Okay. So very bullish on the energy sector for the moment. The key is this is not a short-term play. It's if you're trying to trade crude oil in the near term, it's very challenging on the future side. But this is why options and ETFs is a way to participate in bigger moves for the longer term with less risk. Okay, so that's really something to really look at. Okay, and then lastly, we had a grain report this afternoon at noon Eastern. As you guys know, I also love the grain markets, and obviously with inflation, food inflation, and so forth, it's something to really focus on. Corn has a gap I'm looking at around the 6.75 a bushel. Soybeans similarly around 14 a bushel, and wheat is essentially still in a range. And we also, by the way, here at Transparent Trading, we also trade the byproducts, bean oil and soybean meal and soybean oil, which are really cool little products. If you haven't done so in the past and you want to participate. And by the way, I do, again, obviously with, you have to understand how the markets work. There's a mini contract in corn and soybeans, and nothing that I tell you is specific, but again, what I can do is if you contact me, I can guide you, give you some guidance on what products, what so on and so forth. Okay. Any questions before I get out of here? Okay. Thank you guys for joining me. For those of you that come in, I'm getting a lot of views afterwards. Please do me a favor, subscribe to the channel, let people know where I'm at now. So Trader T, if you know other people at OTA and they lost touch or whatever, spread the word. Yep, that I'm on YouTube now. Subscribe to the newsletter if you haven't already. And again, contact me via the link below if you have any questions, comments. And if you are interested in taking the class also, there's the link below. That's coming up next Thursday. I'll talk about it Tuesday. If not, hopefully that was helpful, everybody. Have a great weekend. And we'll see you on Tuesday. Remember, I do these on Friday and Tuesday. So if you subscribe to the channel, you'll get the notification. But just count on me being in here Fridays for the wrap for the week, and then midweek on Tuesdays. Okay. All right, everybody, have a great weekend, and I'll see you soon. Again, contact me if you have any questions or comments or you need anything. Okay. All right. Take care, everybody. Have a great weekend.